biggest questions any brand new business owner faces is, should I run my business as an LLC or a sole proprietor? If you're thinking, why does this matter? I just want to work on my logo, my branding, my website, all the fun, shiny design things. I totally get it. But stop that thinking. I want you to start your business off on the right foot. So in today's video, I'm going to explain what each of these entities is, what they mean from a liability and a tax perspective, and why you may want to choose one or the other. So let's dive in. Hey there, I'm Heather Harris, founder of Copper Bottom Design Co., a boutique product development agency that helps creative entrepreneurs just like you create beautiful and functional planner products. Now, I've been in business for nearly 20 years, and I'm here to empower you as a business owner by giving you the tools and information you need to make the best decisions for your business. Now, before we dive into this video, I want to note a few things. I am not a licensed tax professional, and I'm not licensed to give legal advice. All I can do is give you general advice based on my experiences as a business owner. I don't know your individual circumstances, so it might be best to seek the advice of a CPA or legal advice if you have specific questions. Number two, all of this information is for a business being run in the United States. That's where I'm based. I'm based in Massachusetts, so that's the tax code I understand, and that's what I can give you advice on. Number three, there are several types of LLC. There's a sole owner LLC, a partnership LLC, an S Corp, and a C Corp. Now, the S Corp and the C Corp LLCs have salary requirements for the owners, meaning that you have to put yourself on payroll and pay yourself a salary. I'm not going to talk about those today because we're going to talk about brand new businesses that are just starting out and that simply don't have the income to pay their owners. I'll be talking about an LLC that you legally form in your state and choose not to designate that as an S Corp or a C Corp. You would be designating it as either a sole owner LLC or a partnership LLC. And this is just for tax purposes because you're not going to be on payroll. And I'll get into that a little bit more later. Make sense? Okay. Let's get started. A sole proprietor, an LLC, what the heck are they? A sole proprietor, in the plainest, most simple terms, is a one-person business or one business owner. Sole meaning only, and proprietor meaning business owner. As soon as you start providing a good or a service that somebody pays you for, you are a sole proprietor. Without declaring any business name, filling out any forms, you just become a sole proprietor by default. Now, you can declare a business name and file a DBA, which is a doing business as declaration, and start representing your business under that name, which I think is a great idea for branding purposes. But you're still a sole proprietor in the eyes of the law until you register the business as its own entity. An LLC stands for Limited Liability Company. It's a company that you form that has limited liability to you as the owner or owners if you have a partner. Basically, you are setting up a separate entity that runs the business. That is not you. You own the entity and you may work in the entity, but you are not the entity. You and the entity are completely separate things. You must fill out a form to become an LLC in your state. So in my state of Massachusetts, I had to fill out a form to create my business entity of Copper Bottom Design, and my state charges $500 a year to keep that LLC active. Every state is different, so you'll want to check your local state to find out your fee. So which one do you choose for your business? I mean, I would say the easiest thing to do is be a sole proprietor. All you have to do is start working and selling your goods and services. It's easy as that. No forms to fill out. You just start working. Any money you make, you'll report on your personal income tax return. The IRS then taxes that income minus any expenses, just like it would tax any paycheck from a day job. So you get taxed at that same level, that same tax bracket you're in on a federal level. It's the same amount of tax you'll pay for the business income as it would be for a day job or any paycheck income you get. The IRS then adds on a self-employment tax, which is currently 15.3%. Now, this includes your Social Security and your Medicare. Now, you get taxed these percent that for Social Security and Medicare from any day job or paycheck you get. But there's something a little different. When you're getting a paycheck, your company that you're getting the paycheck from pays half of the Social Security and the Medicare taxes, and you as the employee pay half through a deduction in your payroll. The income you make in your business as a sole proprietor, because you're the owner of the business, you're going to get taxed that full 15.3% because you are the owner and the employee. There's nobody to split that with. Your business income as a sole proprietor, you are taxed a little bit more than you are from your paycheck. So you get taxed on this business income at whatever tax bracket you fall under, whatever percentage you are at the federal level, plus the self-employment tax. Now, if you live in a state that charges income tax, you also have to pay that at the state level. Now, there are slight deviations to what I just mentioned based on how much you actually bring in income-wise in this business, but this is a general idea of how the taxes work for a sole proprietor. With an LLC, you file a separate tax return because the LLC is its own entity. So you'll file your personal tax return and the tax return for the LLC. When filing taxes for the LLC, you'll be asked to check a box of what type of LLC you are. A sole owner LLC, a partnership LLC, an S Corp, or a C Corp LLC. For today's video, like I mentioned before, we're going to be checking the sole owner box or the partnership box. When you check the sole owner or partnership box, this tells the IRS to disregard the LLC as an entity of its own for tax purposes only. Meaning you and the LLC are one as far as taxes are concerned. What happens then is that all the profits from the business will then get passed from the LLC to you and or your partner if it's a partnership, and you pay taxes on those profits on your personal income tax return. So in regards to taxes, there's no difference between the sole proprietor and a sole owner or partnership LLC. Now, for a business making more than like $50,000 a year, say, and this would be when you consult a tax professional to find out your own certain circumstances, because taxes are so nuanced and that income number could be different for everybody, but there is a threshold on where it makes more sense to declare yourself as an S Corp or a C Corp over the sole proprietor or partnership LLC. And like I mentioned, once you declare being an S Corp or a C Corp, you're required to put yourself on payroll. But remember, we're not talking about that today. This will happen in the next phase of your business. Today, we're talking about just starting out and your business is brand new and we're not making a profit yet. So to recap, in regards of taxes, there's no difference between a sole proprietor and a sole owner or partnership LLC. The financial difference is that with an LLC, you'll pay your yearly fee to the state plus any fees associated with filing that extra tax return for the entity, the LLC. For example, if you're using an accountant, you'll have to pay them a little extra to file that extra LLC paperwork because they ain't working for free. So you may be wondering, why is it even worth forming an LLC if it's going to cost me money and there's no difference in taxes? So why would I pay that money if I'm not even making any money? The most important difference between a sole proprietor and an LLC is the issue of liability. With a limited liability company, you're paying for an extra level of liability protection that the LLC offers you. As a sole proprietor, if anything goes wrong in your business, you have no protection and you are entirely liable for any wrongdoing. There's no separation between your personal assets and the assets of the business, meaning your personal wealth could be used to satisfy any business debts or liabilities. So if you get sued and lose, the wages from your day job could be garnished, you could lose your home, etc. With an LLC, the business is a separate entity, meaning that the owner or owners, if you're a partnership, are not personally responsible for the debts and liabilities of the business, which comes in very handy if lawsuits ever come about because it provides a separation or a wall between you and the business. So what happens over here in the business and what happens with you and your home and your personal wealth is completely separate. Your personal assets are protected from any wrongdoing in the business. In my opinion, the extra cash is totally worth that extra level of protection if you're actively engaging with your customers in a transactional relationship, meaning you're actively providing them with a service or goods that they're paying you for. Once you start having those transactions with the public, your exposure grows and so does your risk. If you're in the research and development phase of your business and you're just really using like social media or writing on a blog to gain an audience and gain some traction and recognition, then you're probably safe staying as a sole proprietor. With that said, everybody's circumstances are different. So let's take a snapshot on the benefits of each business structure. Sole proprietorships are ideal for low risk businesses that are just testing a business idea. If you're doing market research, like I said, and not having any any transactional relationships with customers, you're probably safe to be a sole proprietor. So that's the one benefit. Second benefit is that there's zero cost to establish it. And the third benefit is tax filing is easy. With an LLC, their benefits are it's a good choice if you're a medium to higher risk business and are actively engaging with your customers in a service capacity or actively selling them goods. Because the more interactions you have with the public, the more risks something could go wrong. Number two is that it's a separate legal entity in the eyes of the law, so your personal assets are completely protected and separate from the business. And number three, forming an LLC actually helps you establish some credibility as a business. So as you can see, a sole proprietorship is easy, it's cost effective, and it's best for when you're just testing the waters. An LLC is best suited for businesses that are growing pretty fast and need that liability protection. When choosing which is best for you, I want you to think of your immediate business objectives and take that into account. You can always start as a sole proprietorship and then switch to an LLC later. Or if you think you're going to take off, you have a huge audience and your things are going to sell really quick, then start as an LLC. You will be thankful that you have that extra protection. As an entrepreneur, you're constantly learning and taking in so much information to better yourself and your business. And I hope I was able to provide you a little insight today on which option is best for you. Another subject I can provide a ton of insight on is overseas manufacturing for your planner products. If you're interested in learning all about manufacturing your products in China, check out my last video where I compare manufacturing in China versus the US. See you next time.